Sue, do you want me to take it away at this point?
Take it, Beth. Yes.
Okay. Well, thanks for the nice introductions. Good mornings, almost good afternoon, everybody. Thanks for being here. I'm going to share my screen and then we'll get going. Let's see, Sue, I am having a hard time. Oh, okay, here we go. It's not you, it's me. It always is. All right. So Willapa Works, the Washington Coast Business Accelerator, is the three-party project that has come together recently in the past several months. It's made up of Enterprise for Equity, Pacific County EDC, and the Port of Willapa Harbor. And we're the ones that, among other things, brought the Washington Coast Business Accelerator program, which a few of you, I think, attended. And today, Melissa, Andrew, and I are going to be talking about financing your small business. We're going to talk about different financing options, talk to you about what lenders look for, and give you an idea of how to be prepared or how to think about being prepared if you approach a lender. So what's going to happen is each of us will introduce you to our particular lending financing programs and give you a chance then to do a little Q&A with us. But before we start doing that, I wanted to just mention that many of you are maybe familiar with this, but there are more financing options than we're going to be able to talk about or have the expertise to discuss today. But I didn't want to not mention them because some of you might not be familiar. So I'm just going to talk about these briefly, give you a couple resources, and then I'm going to turn this over to Melissa to talk about Bank of the Pacific's lending program. So various financing options. Crowdsource funding, of course, over the past 10 years has become quite a popular way for people to avoid using credit cards or banks or credit unions to get some funding for their businesses. And I know a lot of graduates of our business planning program have used the GoFundMe or the Patreon, which is primarily for artists, or Kickstarter to raise $5,000, $10,000, $15,000, $25,000. There's the Lending Club, which is a peer-to-peer financing resource. All of those, of course, you can dig into online and look at the different sort of parameters and requirements that you need to be aware of before you go down any of those roads. I don't know if there are any in Pacific County, but there are investment groups or investment networks around. Lion is up in Jefferson County, and that's like a group of potential investors who are looking for good local business projects to invest in. Think is in Thurston County. So there may be ones that have sort of a broader geographic reach that you could research online. There are business plan competitions that people can enter to pitch their business idea, their existing business, and win money. They're angel investors. So these are people who maybe in your local community have money that they want to invest in something that they really believe in, that's local to their area. And these can be some kind of equity investors, which means that they have some modest ownership of your business. There are lots of ways to design what equity investors can look like. There are small SBA loans, which you can easily find by Googling Small Business Administration SBA loans. You can work with your local SBDC advisors to investigate those. And then, of course, there are financial institutions like the ones that are here today to talk to you about our particular loan programs. I want to give you a couple of resources. One is this book by Jenny Casson. It's called Raising Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. And she is a lawyer, and she has a law firm. She works with small businesses, and she really covers a range of financing options and how to think about them for your business. So if you want to educate yourself, I think this is a really good resource. I also interviewed one of our graduates, Sash Sunday, who owns Oli Kraut, which is a very, very successful business that grew from basically selling out of a cooler in their front yard to, now being, having 20 employees and selling in Canada and up and down the coast. I have a video of her talking about the variety of financing options her business used over the years, and I think it's pretty educational and inspiring. And for those of you who want access to this video, we'll collect your email addresses and I will send you a link to that 20-minute video. Okay, I'm going to stop my screen share and I'm going to turn this over to Melissa. Your sound just seems not working.
Okay, there we go. Sorry, I put it on mute so I could shut out the other noises in my office. Thank you, Beth. My name is Melissa Ramsey. I'm with Bank of the Pacific. You can find me at the Long Beach branch. I have been with Bank of the Pacific for 28 years. I worked my way up, so my latter years working in commercial banking, and for the last 2 years doing commercial loans as well as small business banking. I have an example here for you of what the Bank of the Pacific business loan application looks like. Let me move a few things out of the way here. So along with this business banking loan application, you will need to fill this out completely, letting us know what type of organization you have, letting us know what the ownership is and the percentage of each owner. Typical percentages are 50-50, 40-60, depending upon how many owners there are. If you have 3 or more, you just want to break those down and be able to tell us who each individual is. If the ownership is less than 20%, that owner does not need to be part of the loan application. Along with this application, we need entity documentation. Examples are articles of incorporation, operating agreement, bylaws, meeting minutes. We need you to identify the signing and borrowing authority. If that's not broke down in one of the documents of your entity, then just an easy meeting minutes identifying who those are so that we can be compliant. So on the bottom there, we need to know what your current debt schedule is by breaking down who the creditor is, what the balance is, and what the terms of the credit is. We also need your personal financial statement. This is just the first page of 3. It has the assets and liabilities that will total on the bottom, showing us what your net worth is. The second page is really just a breakdown of some of the items on this front page, including stocks and bonds, mortgages, and real estate owned. You can fill out the second page first if it makes it easier for you. Either way, it's entirely up to you. We just need to have them both filled out. The third page will be your information, personal, as well as the sources of annual income. There is a disclosure at the bottom that signing below, you are going to give us the ability to pull credit. And of course, the signature itself is what makes the application complete. With the personal financial statement, we'll need 2 to 3 years personal tax returns. Depending upon the loan size, smaller loans only need 2 years. You want to keep a copy of the personal financial that you submit for 2 different reasons. One, your loan type may require that you submit an annual update of your financial. And 2, you'll want it for self-check to be able to just see how you're doing year over year. You also want to be able to reference it when you fill out the annual update if you need to. Business financial statements include an income statement and a balance sheet. We need 2 to 3 years of business financial statement and 2 to 3 years tax returns. Again, those 2 to 3 years just depends upon the size of the loan. More lending requires more information. The bank is looking for a year-over-year comparison to check the health of the business and to assess the cash flow. This will help the bank determine the ability to repay the debt. The role of your CPA and/or bookkeeper is essential. One of the most common problems in small businesses I've found over the years occurs when the CPA and the business try to reduce income tax. What happens is it unintentionally causes the cash flow to be unable to support the debt. We use the debt service coverage ratio to measure the ability to cover loan payments and to possibly take on new financing. Using the formula below, you can do a self-check to see where you're at on qualifying for financing. We use the scoring at 1.25 or better. If you have a better than a 2.25, the higher it is, gives you a little bit more flexibility to negotiate the interest rate because your business is doing very well. You want to keep in mind also showing that you have a profit year over year. Sounds silly, but if you want to sell your business, that's going to be part of the value. And some people, again, they try to reduce the amount that they submit for tax purposes. And it doesn't help your business. It actually, it hinders the ability to finance and it hinders the value when you try to sell later down the road. The debt service coverage ratio is determined by taking your annual net operating income and dividing it by your annual debt service. That debt service, of course, is your monthly payments on all loans. Monthly multiplied by 12 to get the annual in total. And then you'll use that total amount when you're taking the yearly net operating income and dividing. Collateral. The type of collateral to be pledged will determine the structure of the loan. It determines the structure in the amount by using whatever value is established on the collateral. We can lend up to a certain percentage of. It also determines the term. The life cycle of the collateral will determine how long we can make the loan. Commercial real estate has the most flexibility. It does include additional fees. Some of those fees listed here, but not all, are the appraisal and review, the title fees, and environmental. Assets have a lower loan to value and a shorter life cycle. So therefore, the term of the loan is going to be set according to those values and those life cycles. Some examples: accounts receivables, inventory, furniture and fixtures, equipment, anyone singularly or added together. Again, it just depends upon the value and the life cycle. So the combination will have to be worked out with your lender. Revolving lines of credit. A line of credit should be used for working capital, day-to-day operations such as inventory or seasonal items. You want to make sure that you're not putting an equipment loan that should be termed out on your line of credit unless it's just temporary financing to term out the loan. The term is typically 12 months and will renew annually. It requires the line to rest for 30 consecutive days at any time during the 12 months. So simplistically, During that 12-month period, 30 days straight, you need to have a zero balance. And that is to show that it is being used as a line and not as a term loan. Cash injection. The difference between what the bank can lend and the value of the collateral is your cash injection. You probably have heard the saying, skin in the game. It's what banks like to use when they are determining what is keeping the borrower invested and in the lending relationship, keeping it healthy. The bank is looking at it's harder for a borrower to walk away from the business when they have skin in the game. It's about relationships. As mentioned before, your partnership with your CPA and bookkeeper is essential. Your financial partnership is also essential. Partnerships require contributions from both parties, including communication, as well as a common goal to do what is best for your business. You want to make sure that you partner with someone that you can learn from, that you can teach about your business, and that you can openly communicate with. We do value your relationship and value the partners on this panel that we have, the relationships with them. And it will segue into, as we are a traditional lender, our partners on this panel have other means of working with us to do so. Thank you for your time. Again, I'm Melissa Ramsey. I have my email address. Please feel free to email me with any questions. If you need information, I'm happy to help. And I hope you have found some value to this information.
Thanks, Melissa. I'm not seeing any questions in the Q&A, I mean, in the chat, but if anybody has a question for Melissa, now would be the time to feel free to ask those.
I think I've lost the, can somebody take over the share screen?
Yeah, I was just trying to do that and.
Oh, there it is. Sorry about that.
Good job.
Sorry.
Any questions for Melissa, Bank of the Pacific, before we move on to Andrew and Craft 3? Okay, well, no questions yet. Okay, thanks, Kelly. Feel free to use the chat if you do have questions, and we'll try to pick those up along the way. Okay, Andrew.
All right, here I am. Well, Melissa, that was excellent. I'm tempted to almost just say, like she said, but a little bit different. So let me go ahead and share my screen. 1 second. Hopefully, let's see if I do this right. All right. Are we all seeing just, you're not seeing my notes or anything like that yet? I can't
No
see
screen
anyone.
share yet, Andrew.
Oh, no screen share yet? Okay. Screen 1. There we go. All right. Are we seeing a nice snowy village maybe?
Yes.
Okay. Now we're seeing my slide?
Yes.
Okay, perfect. Well, cool. Yeah, thank you again, everyone, for being here. Really, Melissa kind of covered a lot of what I'd say probably most banks are going to be looking at, most financial institutions. But I'm going to tell you a little bit about how my company, Craft 3, is different. I'll tell you a little bit about myself first. So again, my name is Andrew Mattingly. I'm a business lender, vice president here at Craft 3. Kind of similar to Melissa, I've kind of worked my way up. I've been with the company for 13 years and have been in a variety of roles the whole time in our commercial lending department. And I've been a business lender now for the last 3 years. I live over here in Astoria and am born and raised over here. Go to the next slide. And I'll talk just a little bit about who Craft 3 is. So if you're not familiar, we used to have an office in Oahu, and that's actually where we were founded. Um, there's a restaurant there now at the Port of Oahu. I can never remember the Waterline Pub or something like that, and hotel is where I used to report to work for about 10 years. But we were founded in 1994 in Oahu, and the way we're different from a bank is we are a community development financial institution, a CDFI. And there's a large number of us across the nation. Um, one of the bigger ones in Washington is Business Impact Northwest. They're kind of our buddies in the CDFI world up there. Being a CDFI means that we're a non-bank, nonprofit community lender. We're a non-depository. We don't have any deposits or anything like that, and it gives us a bit more flexibility. You can see since 1994, we've invested over $700 million throughout the 2 states that we work in, which are Oregon and Washington. You can see there, those dots represent the different locations that we have offices in. And here in our Astoria office, which includes a lot of Pacific County residents, we've got, I want to say, probably about 12 people who report to this office. But across the company, we've got about 80 employees, and business lenders, there's maybe 10 to 12 of us. What we do, so really, a lot of what Melissa said is similar to what Craft 3 is looking at, as far as that front end, the type of information we're going to look for, the application, personal financial statement, tax returns, things like that. And before I get into this a little bit more, I really wanted to reiterate what Melissa said about the role of your bookkeeper and CPA. I often tell people that even if you don't anticipate asking for funding, in the next 2 years, or you don't anticipate selling your business in the next 2 years, or whatever it is, do whatever you can to make sure that your books look they look accurate. I've had a number of loans that have come to me at Craft 3 where someone says exactly what Melissa was saying. They were trying to lower their tax liability, but then something popped up. An example would be COVID. A lot of businesses were looking for funds, but their previous years prior to COVID, they really reduced their net income, increased their expenses to reduce their tax liability, and then it was at times difficult to provide financing in those situations. So really work closely with your CPA, with your bookkeeper, or take all the QuickBooks classes you can to make sure that you understand your financials, because that's we are all in the financing world, and that's what we're looking at. But what do we do? So Craft 3, we lend money to businesses that generally have difficulty finding financing elsewhere. Melissa mentioned partnering with the folks on this panel, including me. Melissa has sent me a couple of referrals for deals that because of the bank's risk tolerance, she wasn't able to do, but Craft 3 was able to do. In general, we've got a lower risk tolerance, or higher risk tolerance, I guess, than what a bank might do. And you can see some examples there. It's a good business, it's a profitable business, but the individual's credit score is maybe not where it should be. We can work with that. And, I'll say all this is depending on other situations. A lot of times if it's a case of medical debts causing someone to have poor credit, we may be able to look past that if there's some collateral or there's a good cash injection. But you can see some other instances there. Maybe you don't have the collateral that the bank might be looking for. maybe you're a startup. We do startups. It's not necessarily our favorite thing at Craft 3, but we are one of the few lenders in this region that can provide financing to startups. In an instance like that, the most important thing would be a well-crafted, well thought out business plan, and really well thought out, in-depth cash flow projections. You know, it is sometimes kind of a crapshoot thinking what your business that you haven't started yet is going to make in the next 2 years. But it's part of the due diligence of starting a business. And by working with partners here that provide business advice, they can help you make sure that your projections are in line with what a business of whatever your style business might be should be. You'll see there, I put real estate loans, Craft 3 this year, and you know, for the next 5 years, has a big focus on commercial real estate. It's something that we like to do. And we can also do nonprofits. They're a little bit different, and those are sometimes difficult for a bank to do. But that's another thing that Craft 3 is able to help out with. I'll talk a little bit about our loans. So this map here, each one of those dots represents a commercial business loan that Craft 3 has done in this region. You can see there on the peninsula and here in Astoria, it's pretty thick in there. So we make loans to a wide variety of industries, and you know, there's not much that we won't take a look at. There are some instances that may be a little bit more difficult for us to underwrite, but that doesn't mean we won't take a look. You know, one of the few instances where we kind of have a hard no would probably be in the cannabis industry. Our loans are from 25,000 up to 10 million. You know, for the startup side, I'd say the lesser you're asking for on the startup, it's probably more likely. 500,000 for a startup may be a little bit more difficult than if someone was asking me for 100,000. And then our cost of funds and interest rates are typically higher than a bank. And what that means is we, again, are a non-depository. So we don't get, you know, someone's paycheck that we're then loaning out, essentially. That's real kind of basic of how that works. But our loans come from loans that Craft 3 ourselves have taken out, or we get government grants, we get community foundation grants, things like that. And typically, the cost of funds on something like that is higher. There's some cost that we need to pay back to whoever may be providing us those funds, or we need to, if you know, in the case of a grant, we may need to make it really specialized, which can be a little bit more difficult to do. But a couple weeks ago, I did the math. Since we began, we've contributed about $134 million into our region. And I went real broad there. That kind of includes Clatsop, Pacific, Tillamook, Wahkiakum, Grays. And you know, since 2010, when I started with Craft 3, we've done $86 million in loans in this region. And then to narrow that down even more, in just Clatsop and Pacific County, we've done $48 million. And then this is just a little bit about kind of what Melissa was talking about, kind of the business journey. This is something that I'm not going to read exactly, but you can see that the different things that you need to consider as you're applying for a business. You know, one thing that I'll point out there, which I kind of talked about a little bit, was unrealistic projections. You know, people often say that their projections are conservative, and you know, it's just something to think about. But you can see credit challenges a little bit. I'm not going to spend too much time on this, but you'll see that apply for a loan, is a little bit further down this list. So there's a lot that goes into asking for a loan. There's a lot that goes into starting a business. Obviously, there's a lot that goes into running a business. And so making sure that you've got as much kind of set up before getting to the financing stage of your business is really important. And I'm not sure if it says it here, but one thing is to make sure you know what you're asking for when you ask for financing. It's real important to, I think, probably the three financiers, lenders on this call, that we understand what we are providing capital for. And that doesn't mean that there can't be some amount that is just for operating capital, but we're all going to really need to have a good understanding of where the funds are going. And I'll mention a couple things that Melissa talked about. Cash injection, skin in the game is really important. For Craft 3, we've got a different tolerance than what a bank might look for. I often say that if the relationship is important in an instance like this, in financing, as Melissa also mentioned. Again, like I said, I could have just said, what she said. But the relationship is really important. And, for Craft 3, understanding that the $5,000 that someone might have to put towards their business is a real, impactful amount for them is part of the journey and part of the relationship, even though it may not meet a certain equity injection that someone might be looking for. For a company like Craft 3, if we know that is a real impactful amount to the potential borrower, that means something. But then I'll just end with my goofy picture there. You can see my information. It's got my email, my phone number. Again, I'm just over here in Astoria. Always happy to chat through. I've worked for Craft 3 for 13 years, and can talk about it till the cows come home. So, and I think we mentioned that chat box, if someone has any chats there, feel free. If you don't want to do it here, I'll leave this up so you can shoot me an email, but always happy to talk and answer questions.
Just giving it a pause. Oh, looks like Susan has a question.
I have a question to the panelists. There was some conversation about investment networks, and I have a question about how that works and what maybe EDC could do to help advance that kind of option to local businesses. And then my second question is, and probably more relevant to everybody on the call, is we have a number of businesses on the call that are startups, and a lot of the conversation that we've been having on this panel has been how to get funding to expand your business or grow your business. And I think it is the most frequent question that I get is, how do small businesses get startup assistance in terms of capital? So I'm glad to hear about that from any of the panelists.
Great. Well, I'll go first. So this is Beth, Enterprise for Equity. And I am the one that brought up investment networks, and what I understand them to be, and again, I just mentioned these as options that some people have access to because of their geographic location. There may be investment networks that you can find online, but they're essentially groups of individuals, networks of individuals that come together. They themselves have money and they want to invest their money in a local business. And so they will create a set of criteria for whom they will make a loan to. And again, this is a very relationship-based way of getting to know like the borrower, the potential borrower. But two investment networks that I mentioned, one is called Lion, Lion, and that is in Jefferson County. Now, I don't know their full geographic reach. The other one I mentioned is called Think, and that is in Thurston County. And again, I don't know if they lend outside of Thurston County, but you can easily Google these. I can do a follow-up email with links, but I don't know their particular criteria, but they are a non-traditional way that people can get startup funding or funding for an existing business from local equity investors. Local investors. They wouldn't be owners of your business. And then I'm going to address your second question, Sue. When I do my presentation, we do loan to startups. So, I can talk about our program in that, from that perspective. You're right. A lot of people who are trying to start a business just need that little bit of capital, and oftentimes they're financing their business on their high interest rate credit cards, which is sometimes the only way to do it, but not a great way. So that's, I encourage you to get that book that I mentioned at the beginning. And that's called, what was it called? It was the Jenny Casson book, how to raising capital on your
Not
own
lose your
terms.
soul. I remember that.
Raising capital on your own terms, how to fund your business without selling your soul. I know that's what I always remember too. And I encourage you to give me your email so I can share the video resource that I mentioned, because Sash Sunday, who owns Oli Kraut, has done every level of financing for her business possible, from startup to growth. And I think it's really important to hear from other startup businesses, local businesses, who've gone through that journey. Again, like I did mention, crowdsource funding is a very popular way that people will get startup funds, especially if they have either a network themselves of friends. Sometimes, people are, working a job and saving that money or infusing that into their startup business until they can show that skin in the game to approach a more traditional lender. So those are my responses to your questions, Sue.
Yeah, and I can talk a little bit more about startups too. I mean, for me, for Craft 3, typically what we're looking for is, so skin in the game. I mean, we think finances and we think collateral. For me, obviously those are important, but skin in the game for a startup can also be putting in the work, kind of the sweat equity. I often tell my friends at SBDCs, small business development centers or other business advisors, that if someone is coming to me and they've done the work of working with an advisor to craft a business plan, to create their cash flow projections, that means a lot. That it's not a thought that they had the night before in their dreams, and now they're looking for the funding the next day. The sweat equity there of working with someone else, getting an unbiased set of eyes on your plan, means something. But then, also depending on the size of the loan and a number of factors, I would look for some equity injection, some guarantors. Oftentimes, if there's a spouse or partner who has outside income, and they're able to guarantee the loan, essentially co-signing the loan, that's helpful as well. as for the investors, that's a hard one, Sue. I'm not really sure of anyone, so I think Beth was probably best to take that one.
Yeah, I feel like I'm gonna call Michael Cade in
Yes, you
Thurston
are.
County and find out how they got it set up. Michael
And Sue, I
Cade
can
is-
put you in touch with the Lion folks too.
Okay, that would be great because I want to give every advantage to our business startups and business owners that we can create. And I feel like there's a rapid increase in personal wealth in our county. So what we have right now is a bunch of new residents has really forced the median income up significantly, but it hasn't necessarily increased the workforce. So I think a lot of people are working remotely who live here now, and others are retirees that have some wealth. And if they want to invest in the area, we'd love to give them that opportunity to do so.
Right, they
Because
want the local goods and services that, you know.
They want the stuff, yeah.
They want the
They
stuff.
want to have restaurants and night entertainment and, retail and all kinds of things. A plumber, more than one plumber would be good. In the
And I'll
county.
mention real quick a plug for Melissa and for startups. I mean, the two loans that I've done most recently, one of them was sent to me by Melissa on the peninsula. We're both startups, so we can do them.
Yeah.
That's for the bank, as Andrew had said, it's more traditional, and it would be very difficult for us to finance startup. Typically, we refer people to SBA and then look to you partners on the panel, which we, like I said, very much appreciate those relationships, but we're going to try to work with giving you information, but it's going to be the stepping stone to get to us. And it's just, I'm happy to supply information, but that's where I would look to my partners here to be that stepping stone until we could get to the point of refinancing that. And I do see that there was a question, how long is it a startup? I don't know that I honestly have that exact answer, but like I said, we typically, when we're taking an application, we need 2 to 3 years information on the finances. So we really need you to establish that part of it because we are conservative. We don't have the ability to do that higher risk.
Is there anybody that's not represented on this panel today that we should have had here to?
Well, Sue, do you want me to do my presentation and then, because I feel like.
Oh, yeah. Oh,
yeah.
Please.
Okay, well, I don't want, because I feel like Melissa and Andrew both gave nice segues, and you did too, because we do startup financing. So, but don't lose your question.
No, I just start wandering, you know me.
Okay. Here we go. Okay, I'm assuming everybody can see this. Yay. Okay, great. I can't see nods, so
Yes, we can.
yes, awesome. Thank you. Appreciate it. Okay. So Enterprise for Equity is a micro enterprise development organization. So really, unlike Bank of the Pacific or Craft 3, our primary purpose in life is to develop businesses, develop entrepreneurs through training and technical assistance. We ourselves are a nonprofit. We have been around for over 20 years, and we run our business trainings and offer our services in Thurston, Lewis, Mason, and all of the Olympic Peninsula counties. Our mission is to serve primarily people with low to moderate incomes in rural areas. And we work with both startup and existing businesses. So our training programs consist of business readiness workshops where people can, whether you're emerging or an existing business, you can participate in this workshop, which is kind of a business think tank. And it really helps you think strategically about your business idea or your business from a feasibility standpoint. We take you through a lot of strategic discovery activities around your market, your pricing, your capacity, and we discuss things like taxes and regulations and sort of the regulatory and licensing environment, and help you really learn to think about your business from a business with a set of business lenses that might be new. And we're helping people start the business planning process. And then for those who want to go on to develop a full-on business plan, they can do that in our quite comprehensive business planning program that's typically multiple weeks. It involves classroom learning, peer support, and one-on-one business coaching. And you write a business plan through this, but the real value of this program is the researching that goes into writing a business plan, the knowledge you gain, the in-depth, you become an expert in all areas of your business and your industry. And you're developing a strategic plan for your business all the way along with a lot of support and one-on-one coaching. We have people look at their businesses from what we'll call a triple bottom line, people, planet, profit, circular economy standpoint, which is pretty unique to our business programming. And we also offer financial well-being classes, career exploration classes. And then finally, the reason that I'm on this panel is because we are also a micro lender. And we stepped into the business lending lane about 10 or 12 years ago, because we know that so many startup, super small, mom and pop, operated out of their home type businesses just could not access financing. And so we worked with the USDA to become a micro lender. So our loan program sort of policies and do's and don'ts to a large extent are cemented in place by the USDA. So like we don't have super wide parameters around lending, but I'll tell you like who's eligible and what our loans can do. We're a super micro lender, so people can get loans for $1,000 up to $25,000. And you'll see as I go through the slideshow some pictures of graduates of our program, most of whom have borrowed money from us to either start up or expand their businesses. Okay, I always have to move this Zoom bar around the screen here. So, okay, so who's eligible to apply? So only at this time, only those who have graduated from our comprehensive business planning programs are eligible to apply. Now, we run these business planning programs in the virtual environment, and we run them all year round. We just finished a business planning program that was primarily made up of people from Pacific County, some from Jefferson, and we have another one running this summer. We'll have many this fall. So we're around, we're not going anywhere. People can enroll in these programs really at any time. Our loans are only available then to those who live or have a business in a rural area. That's a USDA requirement. Those who meet the low to moderate threshold for their household income. So the LMI threshold is different depending on what county you're in. So I can't tell you exactly what that is until I kind of know where you live, but that's something that we work with our borrowers to figure out. if they meet that threshold or not. And then we can only lend to those who have looked for, not necessarily applied for, but looked for and cannot access affordable financing elsewhere. We are sort of the last lending option available. Yeah, is there a question? I'm hearing a voice, and so I didn't know if somebody was trying to ask a question. Might be a microphone thing. Okay, I'm going to keep going. We do, as I've mentioned now a few times, lend to startups. We cannot lend to people who have federal debt. Having a low credit score is not a deal breaker for us. And I'm going to talk a little bit more about what our
Beth, before you move on, can I ask a question about the federal debt? So does having student loans disqualify you from the ability to?
Nope, I'm so glad. Is it? I can't see who's talking. Is it Jennifer?
It is.
Oh, cool. Hi, Jennifer. No, as long as you're not in default.
Okay, so as long as we're not in default on that, but the actual having them, because they don't seem to ever go away.
It has not been a barrier to our last two borrowers, both of whom
Okay.
had student debt on their in their life. So good question, and I'm glad you asked it.
And I'll throw out there that before we go forward, that your business planning program is absolutely excellent, and I highly, highly recommend it.
Oh, I'm so glad to hear you say that. I'm glad that it was of service and support to you.
Especially Jim. Jim is absolutely amazing.
Yeah, we have an incredible training team, and Jim is the one that taught the program that you were in, and yeah, he's a real treasure on our team. Okay, I'm trying to make my slideshow go forward, but it doesn't want to. So there we are. Okay, so what can our loans be used for? They can be used for working capital, equipment, inventory, supplies, furnishings, fixtures, sometimes debt refinancing, business acquisitions, and leasehold improvements, but leasehold improvements cannot be new builds or demolition. So the vast majority of our borrowers are borrowing money to buy inventory or equipment. I did lend money to a couple last fall who were buying another business. And they were able to use all of the business's assets as collateral against their loan. That was pretty cool. Most of our loans are between, like, I don't know, $10,000 and $25,000, and people are buying like a tractor for their farm or a market delivery van. Or I just lent money to a graduate who's starting up a business as an esthetician, and she makes and sells beauty products. So, you know, we gave her $5,000 to buy the inventory and supplies she needed. Okay. Here's some of the fine print. If you want to borrow from us, let's say you have found a tractor that you need and it costs $10,000. We can only lend up to 75% of the value of that thing you need to buy. So we could only, in this case, in that example, lend $7,500. You would have to show that you could come up with the other 25%. Again, this is the owner equity requirement, the skin in the game that everybody's been talking about today. Sometimes we have some people who have co-signers or who put up collateral for them, but the owner always has to show 25% investment. Now that investment could be, if we're really creative about how we, package a loan request to my loan committee, that equity could be what you've already infused into your business. It just depends. Okay, collateral, you do have to, our borrowers' loans have to be 100% collateralized. So most of our borrowers are bringing forth vehicles that they own, or sometimes pieces of equipment that are quite valuable. And sometimes we can get really creative and say we lend you money to buy a tractor. Well, that tractor can be used as the collateral. So we'll own it and you'll be paying us back to eventually own it. But you'll get to use it in the meantime. So we can be kind of creative around collateral, and we can piece things together to help you meet that 100% value of the loan being collateralized. Our interest rates depend on the amount of your the loan, but they never exceed 4.25% above prime. These days, you know, prime lending rate is, I think it's 8.25, pretty high compared to where it's been over the past several years, but we'll max out at 4.25% above that. So the most an interest rate would ever be on one of our loans would be that, you know, what's current prime 8.25 plus 4.25, so 12.5. If you're borrowing $1,000, we need to have you pay it back in a year. If you're borrowing $25,000, we need to have you pay it back in 5 years. We do report to credit bureaus. So if you're trying to build credit, this is a great way to start doing that through making on-time monthly payments. There are no penalties for paying a loan off early. And because our loan program is only available to graduates, we have a strong relationship with our borrowers. And if something comes up and somebody's like, I can't make my full payment this month, or I need a 3-month, you know, sales are down for the next 3 months because of some seasonal situation, we can work to restructure loans and be really creative and supportive. And I think, you know, that's one of the things that's really special about our program is we are just very, very hands-on. My role in this process is to work with would-be borrowers very, very closely. So I help them prepare their applications. And their applications have to contain all of these items here. And then I'm working very closely hand in hand to build the case for their need for this loan and their ability to pay it back. And I then make sort of a written pitch to our loan review committee, which is made up of 3 volunteers, and they are not employees of Enterprise for Equity. One of them is on our board. The other one is a community loan officer at a traditional financial institution, and the other one is a 30-year veteran business owner herself. So they make the ultimate decisions. I'm just helping work with the would-be borrower in terms of putting the best case forward. And so people really have a partner when they work with me in trying to get a yes for their loan request. Again, my name is Beth Henriquez. I am the loan officer here. I'm also our program director. So I've been here almost 20 years. I have helped develop all of our programs. I have taught them. Now I really just oversee them. And we have a phenomenal training team. And if you are ever interested in exploring our programs, go to our website, look at some of the folks who, like yourselves, own small local businesses. We've got this whole shop local page. We've got a lot of testimonials. It's fun to see other people's businesses and where they're at and what they do. Take a look at our programs, come to a virtual live information session, and we can talk to you about how to get involved with our programs, or reach out to me directly. Okay, I think that's it. I'm not seeing questions in the chat, but I'm certainly open to answering any. Kelly. Hi, Kelly.
Yeah, hi. Miley, you want to hit mute? Sorry, I'm home with the sick kid today. But that allowed me to actually attend this. So, I mean,
Yeah.
trade-offs, right? So
Right.
I have a question about, because it sounds like your personal credit score comes into play when pretty much accessing any kind of this lending, even if it's for an LLC. Is that correct? Okay. So, if one of the partners, because it's a 50-50 business, doesn't have great credit, and mine's good. I'm not going to throw my husband under the bus, but you know, we both lived a long life. How does that, like, do you average them out when you're considering the lending, or do you take the better one?
Great question.
Yeah, so Craft 3, we most typically, it's a little bit of both. I mean, we're going to dive into what caused the credit issues, but I mean, I'm thinking of our kind of internal write-ups, and it's most often what the highest credit score is among the guarantors is kind of what the scoring goes off of. And then we look at what caused those issues, and it's going to be a point that we have to touch upon. But yeah, most often it's the highest credit score.
That would be the
Good
same for
news.
me as well. We're going to look at the highest one. We're going to look at see what transpired. You know, life happens, like you said. So sometimes it's easily explainable, and you know, depending upon how the loan would structure, we could, you know, usually work with that. So it just really depends upon what you're trying to do. But it's certainly not a no right out of the gate. We don't blend them. We do look at them individually, but we look at the stronger person.
Yeah, and like for us, the credit score is not a deal breaker. We would definitely just have a conversation and understand it. And we've had multiple borrowers whose credit scores have, well, actually who've had bankruptcies, you know, so I'm glad you asked that question. And I think what you're hearing is like, don't consider yourself ineligible.
That's all good news. Thank you.
What other questions do we have? We had a couple people drop off. Sue, you had some questions.
I did earlier. I was asking about startups. I think you explained a lot about options that were available on a number of different tiers. I mean, I think this is a great, I started to ask who's not here that maybe would have rounded out the options. So we have a kind of a traditional lender, we have a CDFI, we have the rural micro business lender. Is there somebody else that we should make sure people know is another option to access who's maybe not here today, or another category of possible resources?
I mean, off the top of my head, an actual US SBA rep would probably be a good one to understand all the rigorous requirements that sometimes go into an SBA loan.
Very rigorous. and they, my understanding is they're not very focused on startup, but again, I think that talking to a local SBDC advisor, Small Business Development Center advisor, I think the closest one to you is in Grays Harbor County.
In Aberdeen, yeah.
In Aberdeen, and her name, I know her, I can't think of her name because that's just what happens to my brain.
They're actually coming out to visit like next week or something, or maybe this week. I have somebody visiting from them. I haven't up until now in my life found either SBDC or SBA to be very accessible for micro businesses, either as startups or as expansions. keeping in mind, what's the categories? What does what does the federal government classify as a small business? Anything under $20 million or something in annual revenue. So when you get these micro businesses that'd be like, I'd be happy if I could like break even at the end of the month. It's pretty difficult to get them to look and then if you get either federal or state attention for business development, it frequently is connected with how many jobs are you creating? How many new living wage jobs are you creating? Which is, again, for micro businesses is not the focus, which doesn't mean that they're not particularly valuable. So I'm grateful to all of you for including I think more than 85% of the businesses in our area are micro businesses. So yeah, that was my biggest question. And I think it is true, especially if you're putting together a business plan. If you want to make it solid, use the SBA forms and outline for business planning. If you use theirs and actually fill in all the blanks, you've pretty much you've done it.
Sue, I wanted to mention something too that in Beth's kind of options for financing, there wasn't one to look out for, and that would be the merchant cash advance sort of things. Those oftentimes, if it sounds too good to be true, or if they can get you the money tomorrow, maybe don't. And it might be true with Melissa and Beth as well, but oftentimes the folks who are coming to us are the ones who have used those and now they're in trouble. I can't think of it. Basically, if you get a mailer in the mail that says you can have $30,000 tomorrow, just put it in the recycling.
Good advice, Andrew. I wanted to thank all of you for helping to present all of these ideas in kind of a spectrum, and also for allowing us to record you so that we can share this information again with other folks that were not able to attend today. We really value your partnership, and I don't know about everybody else, but I sure learned some things today. So I wanted to again say thank you, and grateful also to the Washington Coast Business Accelerator for the commerce funding that helped to host us and be able to do this today. Does anybody else have questions? Looks like we have a thank you in the chat.
I see a few people put their emails in the chat. Sue, can you grab those and get those to me so I can send out the recording that I have mentioned about of Sash Sunday talking? Yeah, okay, wonderful. I'll get that out later.
Although I don't think it would be a bad thing to just email that link to everyone and just say if you're interested. And I can just reply all to the link invite. So that would be good.
Sounds good.
All right. Thank you all for coming. Does anybody have a final thought?
Oh, wait, here's something. Transcribed into Spanish. Cheryl Varese is asking if it can, or this transcript can be made available in Spanish. I don't have any idea.
That is an excellent question, Cheryl. I appreciate you asking it. We actually are exploring funding and opportunities to have the entire Enterprise for Equity curriculum translated into Spanish and maybe other languages in the future. We would love to do that. So thanks for bringing it up, but
we recognize the need and we so want to do this.
Let me ask our other folks on the panel, do you have resources available in other languages, Andrew, Melissa?
I don't have them on hand, but we do have Hispanic speaking employees that can help translate. And I do believe that we do have some of our account information and other information that is already translated.
Yeah, and
Okay.
we have Spanish speaking lenders and coaches. We've got some Spanish language educational content, and we can help with the application process. But they've been telling me for years it's due to certain regulations. We don't have applications and loan documents in Spanish.
I wanted to ask, is anybody here a native-owned business? Because I saw that on the registration form, there were a few that signed up, and so I had looked up a resource for lending that's really specifically for native-owned businesses. Doesn't look like it. Okay,
Cheryl is a native-owned business.
there we go. I'm putting it in the chat. Okay, yeah, Cheryl, just check out the chat, the link I just dropped into the chat. Okay,
Kelly, if you identify as a native, I don't think they're asking about federal recognition. We're not the federal government. It's a self-identifying process. We're all working with you. Okay, any other questions or great thoughts?
thanks for hosting this, Sue.
Yes, thank you.
Thank you so much to all of you. You did a great job. I really appreciate it.
Right,
Have a
thanks,
wonderful
everyone.
Thank you,
day,
everyone.
Bye.
Bye.